Hi, everyone, and welcome to this week's installment of Mish's Market Minute. I am your host, Mish Schneider. Thanks once again to StockCharts for all the generous amount of time they give me to talk to you all. So today marks the second half of 2021, and it's an interesting time all around. For us, it's particularly interesting because we go to a new 6-month calendar range, which will start sometime mid-July. And that gives us a general idea of range. But for now, we've heard a lot of expectations for the second half by so many different types of analysts, from this thing is going to rock and roll. Statistically, first half being up 15% in the SPY means the second half may not have as much big a jump, but will continue to go up, to, yeah, we're going to go up for maybe a couple of months and then things are going to start to slow down. And listening to predictions are great, including mine, but they mean nothing compared to price action. So I'm hoping that I can elucidate for you a few of the projections that we have based on some real price action. So I'm going to go through 4 areas of focus here today. I'm going to go through the macro view, the outliers, the inflation stagflation scenario, and then of course, true to form, I will give you some picks and the setup so that you have some things to look at as we go after the July 4th weekend. And here are the symbols that I'm covering in each of the different areas of focus. So let's switch the charts. Okay. That's actually left over from last week when we talked about IBM. Those of you might remember. So let's start with the Qs. Now, what's interesting is, on our charts, we have 3 areas to look at. Excuse me. One, of course, is the pure price action with the 2 very simple moving averages. I really like to keep it clean. 2 is the real motion indicator, which is our momentum indicator, which tells us if momentum is increasing, decreasing, if it's in divergent to price action, or going in line with price action. And the 3rd is leadership, which means that how is this particular instrument doing versus the benchmark. So if we start here, we can see that actually on Wednesday, I'm speaking to you on Thursday, July 1st, it made a new all-time high in NASDAQ, and today it's just sort of having some quiet price action. NFP is tomorrow, so that could actually have some impact or not, depending on what the rates do and the dollar does. But for right now, hard to argue with this price action. And unless we really break down here under, let's say, 350 or 349, I see no reason to change course. Now, on the momentum, if you look at the momentum, what I always find interesting is if you look at the historical momentum, the momentum was better back here. And you could see we had this straight run up and the momentum here kind of went sideways and we peaked out here, even though the momentum the price kept going up till eventually we saw the crash. This is why I'm saying you don't have to necessarily not trade if you see momentum declining, but you should definitely be aware of the fact that it could be just a matter of time that you might get caught in one of these 10% moves lower, just like we saw in March. So as we're going here, momentum is increasing a little bit, but certainly nothing to where it was even over here with price lower. And if we start to see a declining momentum further, as I said, we could see another leg up in price, but I wouldn't get like crazy optimistic bullish. And of course, here is the triple play or the leadership indicator, which again had showed great leadership. Today it's come down a little bit and it's broke down under the Bollinger Band. Could mean we're seeing a rotation, and hopefully what we're seeing for the overall market is a rotation into IWM. So that's why I was so interested to have a look with you. So the IWM to me is key. It's the grandfather of the US economy as far as I'm concerned. And also, whereas we just saw NASDAQ made a new all-time high, this all-time high was made in March, and it was at actually it was even higher. I thought it was at 234. Let me see, make sure I have the right. Well, here it says 233.74. I had another chart that showed 234 and change. Nonetheless, we're not there. That's the bottom line. And one of the things that you should think about as we're going into the second half of this year is what happened in the first half of 2020, similar to what I'm going to show you today. NASDAQ went to new highs. SPY went to new highs. IWM did not. So that is something you really want to keep an eye on. If this gains in leadership and starts to blow out over the all-time high, I would be so much more bullish than I am right now. For now, it's a stock picker's market, as we know, and this is part of the reason why, because of this divergence. Not that this is bad, but look at your momentum. You're under the 50, and look, showing very poor leadership. So that's the other thing, is we've crossed the Bollinger Band here, which is better, but overall, we see that IWM has more work to do. If we switch to the S&P 500, this actually gapped to new highs today, but look at our momentum. It's not even over the 50 or the 200 while the price gaps to new high. Momentum, even in this move up, has declined, gotten better, but still nowhere near where it should be given the all-time high print that we saw in the S&P 500. Again, deal breaker, maybe not. Information, definitely. And then if we go to the diamonds, same thing, although the diamonds also, like IWM, haven't gotten anywhere near the all-time high. If you look at the momentum here, you can see that the momentum right now is showing a little bit of improvement, but still a huge divergence compared to what it should be. So you put this all together, you got a split. You got SPY and Qs looking great. IWM looking okay, but still has work to do. And same thing with the diamonds. And so to me, that is a temperament a little bit, or tempering, I should say, of the overall bullish sentiment. Now, XRT is also looking great, momentum not so much. And take a look here. Your all-time high was at 98.94. We have to clear it. Otherwise, this is just noise to me. But I'd say that if I had a vote for the best chance to clear it, I'd probably give that award to the retail sector because of the fact that seasonally we still have a lot of pent-up consumer demand. And of course, we have a big back to school season coming up. Lots of kids who did not make it into schools last year for obvious reasons might be really anxious to buy everything brand spanking new for this return to school. So keep your eyes here and keep your eyes peeled on that level. And if it doesn't clear and we start to dwindle because of this declining momentum, also duly warned. IYT. Now, IYT is doing a little bit better today, but I'd like to show you the weekly chart in this one because there is a weekly potential bear flag setting up here. Here's your flagpole and here's your pennant. What you're going to have to see in IYT, first of all, is a move over, let's say, I'd say 263, especially as we close the week, considering this is a weekly chart. And what you don't want to see is a break of 255 on a weekly basis, because then that means this is going to be going down closer to that 50-day moving average. But more importantly, if I go back to the daily chart here, this is under the 50-day moving average and momentum is really not great at all. So there you go. So this is another warning. What it's saying is transportation is suffering from a whole bunch of stuff. The biggest obvious problem it's having is with jobs, getting people to drive, getting people to work. The low labor force is a factor. And that, even with jobs report coming out, could be something that comes home to roost. Now, the next one is IBB. And the reason why I show this is it's part of my economic modern family. It's also really doing pretty good. It made its big peak here after all of the vaccines came out. And after a big correction, it's come back. And obviously, if it can get through 165, it continues to look good. But I would not exactly call IBB a market leader. I would say it's more of a non-cyclical, and people are definitely always needing their pharmaceuticals no matter what's happening. And obviously, maybe now people are coming back more into buying things because they're able to go out. Some people just forego their healthcare altogether during COVID, which is a shame. So this, in some kind of strange way, is almost a back to normal type of scenario. Momentum, not exactly kicking butt there either, but at least we got a number here it's got to clear, which is over that 200-day moving average. And finally, to wrap up the sectors that I find key is KRE, this is regional banks. Momentum, not so great. Price action, not so great. So with this one, if we can't get back over that 50 and we start to break down under the 65 level, this could be another early indicator that all this bullish euphoria, not so much. Now, probably my favorite indicator, and this is something that I really believe people need to keep their eyes on, is the junk bonds. Now, what's so interesting about the junk bonds is they just cleared with the high that we had. Actually, this information is different than my information that I'm looking at, because the information that I had showed that the junk bonds made a new high on Wednesday. Today, here it's showing the new high it made today. It cleared 110. So I'm not sure why we're seeing a difference in price action for my TradeStation charts. But nonetheless, the sentiment is the same. If this starts to come down, if we start to see this some kind of a pivotal high and we gap lower like we did in some of the other charts I've looked at, you want to keep an eye on this, particularly on momentum, which right now is still looking pretty good, but not unbelievable by any means. And what this really means is what the Fed is doing, or like I call the Fed folly, regardless of whatever they say, this is where you're going to see evidence of the bond buying. And the other place, of course, you're going to see is in the TLTs, what happens with yields, which right now we have low yields, we have good momentum. And even though the TLTs came off a little bit in the face of the jobless claims being a little slightly better than expected, it's still, as long as it holds 140, showing that there's movement into bonds. By the way, that's not necessarily a good sign, good for bonds, but not good for in terms of confidence of the overall economy. So you can see why the divergence is just bothering me just a little bit. I want to see if I can get the VIX.X here, because volatility, no. So let's see if we can get VXX. I like to look at the underlying, but we'll look at this for now. Now, of course, we'd like to see some level of divergence. That would give us some kind of a hint. And we saw it here, and it was very short-lived. We saw it here for like a nanosecond, and it was very short-lived. So now here we are back with very low momentum here in the VIX. And of course, the VIX is sitting here right at the lows. Do I think any of this is significant at this point? No, but this is really showing you that what I just explained could be a foreshadowing in the face of a lot of complacency, which would only mean that the volatility can explode if anything should happen that spooks the market. I wouldn't be looking at VIX for a buy at this point, but I would certainly, again, be watching it for information. And of course, the other place to look for information really is going to go to our next subject, which is the oil market, which we got over $75 a barrel. People are calling for $100 a barrel. OPEC is meeting. They may increase production. You never know. But right now, certainly the momentum in terms of prices in the favor, but not so much in the momentum. So again, we're seeing new highs in price, or I shouldn't say new highs, new multi-month highs, but we're not seeing the momentum following in kind. And that to me is also a little bit disconcerting in terms of just how bullish oil will be, which would actually be a good thing if it doesn't go crazy much more to the upside. And then finally, in terms of the outlier, we have to look at the dollar. And what's so interesting is as we go to look at our inflationary indicators in a moment, we can see that the dollar is bounced. And remember, I showed you the momentum on the dollar back here. And so in this case, the divergence turned out to be great. It cleared the 50-day moving average in real motion, and then it took a while for it to clear in the price on the 50, but it has, and the momentum is still getting stronger. So that means the dollar is still going higher. Is that going to be the kibosh to inflation? No. And here's why. Let's go over now to some of the other indicators that I wanted to show you. Here's gold. Now, gold, of course, doesn't look all that healthy. It gapped and it's just sort of been flopping around, but it did fill this gap. I like that. It did make a new 60-day low and a reversal. I like that. And what you don't see on the chart is today's low really is the 10-day moving average. Momentum here is certainly not great. It's sitting on the Bollinger Band, but it's not that horrible, at least not as horrible here when it made a new low as it had been. So this to me, I think, is telling you that regardless of what's going on, one of the things that I've been telling people is that gold right now is 20 times less in ratio to the Dow. In other words, the Dow's price compared to the gold price now compared to 1980 when it was more in line is 20 times higher to the Dow. So in terms of the inflation narrative, everybody's talking about inflation, but nobody really knows what inflation looks like. And they won't know what inflation looks like unless the gold either does one of two things, kind of hangs out here and the Dow crashes, or it starts to try to play some catch up to the Dow. And all of a sudden we see the gold going from 1750, clearing 2000. It could go anywhere. I mean, my God, numbers are just numbers these days, as we know. And so 15,000, not crazy. The other thing that's making me concerned about the fact that people don't really understand inflation is that the silver to gold ratio has also spread out, although gold's playing a little catch up. Notice how the silver broke the 200, but held it, had a reversal, hasn't been able to get through here yet. But if we look at the momentum on this one, again, it's skidding at the bottom, but anything can turn this momentum around. And I do believe that if we can get back over closer to 25, this thing is going to go much higher. So I'm still very bullish in the metals in the longer term picture, which leads me to grain. So if we look at the grain market, we can say here, this is DBA. Now, yesterday there was reports that came out that the crops are in bad shape. First you had too much rain, then you had frost in Argentina and Brazil, and now you have drought. And so the crops have already been suffering. And here's another reason why, not to mention supply chain, low labor, and all the other things we've talked about. But this is why we look for a 2-day close over a major moving average. And in this case, yesterday, DBA cleared, and today it's coming off a little bit. Day is young, but if it can get back and close over 1852, that would confirm it back to a bullish phase. And I think that would be interesting. At this point, I would either wait for a return down to 18 or a move over 19, but nonetheless, momentum also not great. But again, I still believe that the food can be a really big key, particularly when you're seeing companies like General Mills say that they're going to have to raise all their prices because food has gotten so much expensive, even just from the raw material side. And I thought it would be good to take a look at copper, which of course is bounced a little bit from the bottom, but this is why people are saying that whatever the Fed talked about, they've subdued the inflation narrative. I just think it's taken a big old rest right now, and it may not look like inflation in copper and in steel. It may look more like an inflation that we finally see in the gold and silver or the precious metals. What's interesting about the gold, by the way, is the dollar's rising and the gold's rising, and generally it's the reverse. When the dollar rises, gold falls. So all of this is very, very interesting to me. And even though steel is under the 50, if it gets back over the 50, we could see another pop. Now, if we move on now to some of my picks, I just want to sum up the overall narrative here, just so you understand your takeaway. Your takeaway from this is a couple of things. Number one is keep your eye on that gold and silver. It is so undervalued if we're really going into a major inflationary cycle, which I believe that we probably are. The yields are certainly showing the complacency on the Fed, and the junk bonds may be signaling some kind of warning, but certainly we have no confirmation of that. We have a divergence here in the overall market in that some of the sectors are weak while other sectors are making new highs. That's telling us that the projections going out, particularly in the labor market, but also in terms of the gross domestic problem, that's a good one. There's a Freudian. Gross domestic product is not necessarily as roseate as we would like to think. And a lot of this has to do with the fact that we're coming back from historical news things, which is a market that dropped so hard because of pandemic, and we're just going back to normal, and then we'll see what happens beyond normal. So that's it. Now, Walmart is one to take a look at. They started giving generic insulin to diabetics, which, by the way, is cheaper. And that's a good thing. So that gave it the stock a little boost, but also again, Walmart could benefit from some consumer demand, also lower prices than say Whole Foods. And there also, the fact now is that we're seeing a move over both moving averages. We saw it on Wednesday. We're getting an inside day today. So we may at least confirm one phase change over the 50, and then we'll see what happens over the 200. But I like this, particularly over these highs at 142.50 with a stop under 139. And you can see our momentum is actually caught up. So Walmart looks pretty darn good right here. Another one that was actually just pointed out to me today is Redfin. This is real estate. Now, real estate is still rocking and rolling. I like this stock, though, because this actually, although we had a death cross here, we're back over the 200 in an accumulation phase. The momentum is okay, not unbelievable, but I'd keep my eye on this one for next week for sure, with a good stop right under the 50-day moving average, say under this low right here. So figure 59. And if this can get back up over these high right here, let's say around 65, you have a good $6 risk. This has a lot of potential to the upside. So keep that one on your radar. The next one is One World Spa. This is actually a company that does a lot of cruise lines and hotel bookings and travel. This has come off with the oil prices because obviously things are getting more expensive, but we're bouncing off the zero line in the momentum, and we're bouncing off of the new low that we had yesterday under the 200 and then clearing. What we need to see with this one is for it to close over 974 on Thursday. And then if you're watching this on Friday, if you wanted to take a shot, I'd do a tight stop under this low and buy it over 10. UPS. Transportation did come back a little bit today, and partly because of UPS. So you can see this was hugging this 200 and then popped up a little bit, filling this gap. That's generally a good sign. We still need to do some work in momentum, but essentially now I would say either it has to clear 210, or I'd like to see a move down closer, maybe to about 206.60, 207. And then I think you can have a good buy with a risk down to under 200 to see if this seasonally can actually do something to the upside. Couple more left. We got Caesars. The reason why I'm looking at Caesars is because Las Vegas is back. And so Caesars is a good chain to look at. We just booked actually a stay at Caesars in August. It's now popped over the 50 yesterday, is sitting right on it today. So we're going to be watching that 50-day moving average very carefully here to see if it can close above. And if it can, we also want to see the momentum improve on this. But this also could be an interesting play, particularly against 100. I wouldn't risk much more than that. Two more to go here. One is MP. Mountain Pass, I put this out on Fox yesterday. We actually reached a target on this one today. But overall, look at the momentum increasing here. Because this is rare earth minerals, and you need rare earth minerals to power all of these electric cars, this could be a real sleeper still. This was a SPAC that went public, did unbelievably well after it did, has been consolidating and basing out, which it broke out of recently. And I see no reason why this can't get to 50. I think longer term, this thing can even double. And finally, MSOS, which I brought to you last week when I covered cannabis as one of my areas. New issues, so you're not going to see much information here. But we got a nice move here over the 50-day moving average. So we close over the 50 a second day. That would be Friday. Then I would say that this is really a good opportunity with a pretty tight stop underneath today's low, depending on what happens on Friday. And I do believe that this too is something that has tremendous potential to the upside as cannabis becomes more and more widely accepted throughout the United States. So that's it for now. You all have a really wonderful July 4th weekend. I'll be back with you all next week. I hope you enjoyed this segment. I gave you some good ideas. And in the meanwhile, thanks so much for watching, and bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.